This video is for you if you want to make some of your money tax-free in retirement. Well, let me just give you a real simple example. I don't want to make this complex. I want to make it really simple. So let's say that you had an IRA of $200,000 and you wanted, this is going to be fully taxable when you take money out. We know you have to start taking money out as required minimum distributions at age 73. Let's say you don't want to have to pay taxes for the rest of your life on this account, and or you don't want to have to start taking required minimum distributions at age 73. So one of the things, this is not the only thing we can do, but one of the things that we can do to make some money tax-free is that you can take this IRA that's fully taxable and you can change it into a Roth IRA where it will be tax-free. So there's a couple of ways to do this because you may have IRAs and 401ks that are a lot bigger. I'm just using a simple example. But you can either do this a little bit at a time and pay the taxes on the $200,000. You could convert, let's just say $100,000 one year and $100,000 the other. Or in just an example, if you make this a Roth IRA, you'd have to pay the income tax on $200,000. So if you did it today in January, you would actually get a 1099 if you did the whole thing for $200,000 and you'd have to pay the income tax on $200,000. Now what's more commonly done is we take a look at your investment statements, your IRA, your 401ks and other things, and then we look at your tax return and we do it a little bit over time, trying to fill up the tax bucket. We look at each bracket per year in your situation and then decide how much should we convert each and every year. So we don't have to do it all in one lump sum. We can do it a little at a time, but either way, whether you do it lump sum or a little at a time, this money now, when you take it out, is going to be tax-free. Now, when you leave this account to your spouse or to children or grandchildren, it is also going to be tax-free for them. So basically the bottom line is converting money from a taxable IRA to a tax-free Roth IRA, either lump sum altogether or a little bit at a time, will allow you to have diversification as far as taxes go. With investments, we talk about diversification. Now we're talking about tax diversification. Maybe some of it's taxable, but have some tax-free. It's just another added protection to help you enjoy and maximize your retirement.
And Pete, one of the common questions we get from our clients is, what percentage of taxes am I going to have to pay when I make this conversion?
Okay, so the best answer I can give you, the most accurate answer is number one, it depends. It depends on your tax, your income situation. That's why we want to look at your tax return, see where you are at with the brackets, and make an intelligent decision to maybe convert to the Roth IRA over a few years while you're in a lower bracket and not push everything to a higher bracket.
So Pete, how could people get in contact with us to see if this makes sense for their particular situation?
So we have a couple of requirements. The first one is that you have at least $1 million or more in investable assets. And number two, being open to making a change if you have a current advisor.
And if you don't qualify, no worries. You can still check out some of our free training down below and subscribe to our YouTube channel.